Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt of Pacific Private Money and Brian Burke of Praxis Capital. And when we cut to the third and final break, we asked this trivia question. This 1995 film starred a talking pig that learns how to shepherd sheep. And Phil, you're still in the studio here. What was the answer to that?
Babe?
Babe, that is correct. All right, now, before we forget, Mark, a lot of people in the audience I'm sure are going to be very interested to hear about how to get a hold of you if they wanted to invest in the trust deeds or if they have need for capital.
Sure, we were just finishing up in the last segment talking about how at Pacific Private Money, if you're a real estate investor and you're looking for capital to either buy fix and flip or to buy for long-term rental hold, you should be talking to us. Also, if you're a listener and you've got money sitting idle and you'd like to know more about how you can achieve high yields safely and securely, and we're talking interest rates of 8 to 10% on your money, and they're not a long-term commitment either. You should check us out at pacificprivatemoney.com, of course, all one word, pacificprivatemoney.com, or call us at 415-883-2150.
Okay, and if we have time, we'll get into email time. But Brian, tell us what is going on. You went to an exciting conference.
Yeah, I was invited to be a panelist at the Keiretsu Forum's Fall Real Estate Forum last week in San Francisco. It was a great forum. If you've not familiar with the Keiretsu Forum, it's the world's largest angel investor network, and they have over 850 angel investor members. And the topic of the Fall Real Estate Forum this year was, are we in another real estate bubble and how do we profit from it? And it was a lively discussion, and we talked about what's going on in single family, multifamily, and office. For anybody who hasn't heard what I do, our company is Praxis Capital, and we're a private equity firm that has a focus in distressed single family real estate and also in multifamily real estate. But in California, single family is really where the play is right now. Multifamily's a play elsewhere. We believe there's a strong multifamily play in Texas.
So you go ahead and scoop up these distressed properties and then offer them to your investors?
Yeah, essentially what we do is we run investment funds, and the investment funds have a number of investors in them, and then on behalf of those funds, we purchase property from foreclosure pipeline. And there's a lot of them out there right now. There's millions of foreclosures left to happen. At some estimates, about 4 million left. But what's interesting is that I think if you go back to look at what happened, they asked about the bubble. Over the last decade, from 2000 to 2010, if you go to write the history books later on, you'll probably end up calling that the bubble decade. But when they go to write the history books from 2010 through 2019, I think the way they're going to describe it is they're going to call it the rental decade. And the reason is that the U.S. home ownership rate has declined from a high of over 69% in 2004 to just below 66% today. And it could fall to as low as 60%, according to some analysts, after the foreclosures work their way through the system. And every 1% drop in the home ownership rate creates 1 million new renters into the rental pool.
Wow.
So the decline from 2004 to now is actually the steepest decline since the Great Depression. And this is happening at a time when house prices have fallen so dramatically that you can buy properties for about 1/3 of the cost to build them. So rents are going up, and prices are coming down, and it's kind of what you'd call a perfect storm in real estate investment. Single family's traditionally been a mom and pop business because the yields were so low that the strategy was really just to rent the house out and try to break even and let the tenants pay your mortgage off.
Right, and hope for appreciation.
And hope for appreciation down the line. But while that strategy works better now than at any time in recent history, the market dynamics have just created a much larger opportunity. And the reason for that is that higher yields, coupled with those lower prices and the ability to buy large quantities of homes from the foreclosure pipeline at significant discounts, are just making this a viable and scalable enterprise. And that's essentially what we're doing at Praxis, is we're implementing a strategy to make a scalable business out of owning single-family rentals, which has traditionally been more of a multifamily play.
So what kind of returns can you provide to your investors then?
Well, what I can say is, if you just take a look at the raw numbers from an asset level, and at the peak of the market, house prices were, it wasn't uncommon at all to buy a house for 20 times the annual rent.
Right.
But now we're buying houses as low as 5 times the annual rent. So in other words, in
Amazing.
5 years' time, we've collected as much rent as we paid for the house. So we're seeing yields like we've never seen before, 10% cash on cash, just from the rents coming in, and then you will have appreciation, I'm sure of that. When you look at the replacement costs, we're buying houses in some cases as low as $80,000 in communities where it costs $70,000 just to get a building permit. So there's really not a compelling story for prices to have much more to go in a downward direction, that's for sure.
And Brian, in your funds, unlike some funds, some like mortgage pools that I know that some of our listeners may have either themselves or maybe they know people who've gotten their money kind of stuck in a mortgage fund from say 2005 or 6 because maybe they were making land loans, etc. So unlike some of those non-performing mortgage pools that people have heard horror stories out there, you've been running funds consistently for what, over 10 years and through the peaks and valleys, and yet you guys have never failed to provide actually pretty handsome returns to your investors, isn't that so?
Well, that's true, and everybody's heard the old real estate axiom of location, 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 right?
Wait, location, and what was the last part?
Yeah, I think it was location.
Okay.
Yeah, but see, I throw that one completely out the window. I don't think that has anything to do with reality today. I believe that there's 2 additional factors besides location that are equally important to your success, and one of them is timing, and the other is strategy. And the reason that we've been able to produce consistent returns throughout every market cycle is because we recognize what the timing is telling us, and we recognize which strategy we need to implement to take advantage of that timing, and then we also have to know where to do it. So right now is a good time to have a strategy of holding apartment buildings in Texas because they have a massive amount of job growth. Not so much in most areas of California. It's not really a multifamily play. 4 out of 5 foreclosed former homeowners do not move to apartments after they move out of a foreclosure. In California, we're ground zero for foreclosures. So they're moving into single family houses. So now is the right time to implement the strategy of owning rental houses in California. 5 years ago, it was not the right strategy or time. Back then, you got to buy, fix, and sell and get out quickly.
Yeah, Brian, there are people sitting on the edge of their seat waiting for you to give them your information so they can get a hold of you.
Oh, so you
I'm sure they want to invest in that.
Yeah, it's been a great strategy for our investors. You can find us on the internet at www.praxcap.com. It's praxcap.com. Or you can go to the show's website, bestofinvesting.com. There's a link to our website there.
Awesome, yeah, and I just want to say, Brian, you guys, I know some folks have been investors in your funds for many, many years, and they are extremely happy. I know you don't like to brag about them, but maybe I'll do a little bragging for you. You
Well,
really
we
need to
sure
investigate
appreciate
these funds.
Yeah, absolutely.
Good. All right, well, first of all, I want to thank Phil Diamond again for coming into the studio and being our guest.
Thanks for having me back, Edward.
Hopefully I'll never need your services. That's okay. All right, thoughts for the day. To steal ideas from one person is plagiarism. To steal from many is research.
Research, yeah.
Very good. And if a man is in the forest talking to himself with no women around, is he still wrong?
I love that one.
That must be
Yes.
from the book, yes, that must be from the book Women Are from Venus, Men Are Wrong. I want to thank my engineer Hunter Hornstein for orchestrating this show. Thank you, Hunter. And tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. But also make sure to listen for the special
big prize.
trivia. That's right, the special trivia contest where the winner is going to receive a free 3-day, 2-night stay at the Ritz-Carlton Half Moon Bay, which is a fantastic place if you've never been there
That's
before.
a don't miss right there.
It's a don't miss, as they say, exactly. And what we're going to do in that case is people are going to email the answer instead of calling it in. And then what we'll do is we will draw from the winners next week. So again, Mark, how do people get a hold of you?
That's pacificprivatemoney.com or 415-883-2150. Call us if you're a real estate investor looking for investment capital.
Excellent. Okay. Thanks for listening, audience. On behalf of our team, I'm Edward Brown. wishing you the best of investing. So long.